Hello, my name is Steve Bigelow with the Candlestick Forum. The market direction is still choppy. As we have seen, the Dow sold off yesterday and it's hovering right here on the T-line. But the main factor is it's still trading above the T-line. However, it's at a point with a doji that tells us which way it's probably going to go tomorrow based upon how they open. If they open it lower, we've got a good idea or a good indication they're going to be taking it down lower. The NASDAQ, kind of the same scenario. We had a big sell signal, a big bearish engulfing signal that closed below the T-line. Today, it opened lower and closed back up above the T-line. However, it's not a reversal signal. So we've got to be very careful that if they open this lower tomorrow, the market is still selling off based upon that bearish engulfing signal. What we definitely need to see to maintain the uptrend is positive trading tomorrow. However, as a candlestick investor, the choppiness of the market is not affecting some of the recommendations we've made recently. The oil stocks like Occidental had set up for a perfect J-hook pattern. It's still moving very nicely. So these are good percentage moves. We've also recommended Apache, APA, as well as ARCO. They're all in steady uptrends. Even the big stocks like ExxonMobil are in an uptrend. And why are they still showing good trends? Because we can easily analyze what crude oil prices are doing. Note that it's in an uptrend, hasn't been able to close below the T-line. This allows for investors to have additional information of what's moving prices to give them more confidence to stay long in positions that are in good, strong trends. The other areas are like the BLNK in the electric car charging. You can see it was setting up as a J-hook a few days ago, still in this uptrend. Lithium, a J-hook pattern, mining for or LTHM, mining for lithium, a J-hook pattern. The prospects are that this uptrend will continue. So what this basically allows us to do is recognize which patterns are working the best during these market conditions. The J-hook pattern is producing some very good profitability. Same scenario on the downside. The T-line is a major factor for staying long or staying short. Our recommendation to go short on Overstock was based upon the left-right combo, failure at the 50, and you can see we were already in a downtrend. As long as they can't close this above the T-line, figure you're still in a downtrend, with the prospect being this level right here, which would get very close to the 200-day moving average. So the advantage we have is we can still see which stocks are acting the strongest and which stocks are acting the weakest. So if you're in a market condition where you don't know which way the market's going, this is a good time to have both long and short positions in the portfolio. A benefit we have with candlestick charts is we can see which sectors are acting the strongest and which sectors are acting the weakest, so we can have both longs and shorts. That'll be it. We'll see you in the chat rooms.